On August 12, 2025, Boeing stunned the world by halting all aircraft production. The announcement sent shockwaves through the global aviation industry as the company's massive assembly lines ground to a sudden and complete stop. For decades, Boeing's factories had been a symbol of American industrial might, churning out aircraft that connected continents and powered economies. Now, for the first time in living memory, those lines stood eerily silent. This drastic move came after China retaliated against new U.S. tariffs by banning its airlines from accepting new Boeing jets and blocking all U.S.-made aviation parts. The Chinese government's swift response was a direct answer to escalating trade tensions, and it targeted one of America's most iconic exporters. The ban was comprehensive, affecting not just new aircraft deliveries but also the critical supply of replacement parts and technical support. With China accounting for a quarter of Boeing's sales, the company lost access to a vital market overnight. For years, China had been Boeing's fastest-growing customer, with its airlines placing massive orders to keep up with the country's booming travel demand. The sudden loss of this market left billions of dollars in future revenue in limbo and forced Boeing to reassess its global strategy. The ban also left Chinese airlines scrambling, as hundreds of their Boeing jets suddenly faced the risk of being grounded without certified parts. Maintenance crews rushed to assess their fleets, while airline executives urgently sought alternative suppliers. The uncertainty threatened to disrupt flight schedules, strand passengers, and create chaos across China's vast aviation network. Boeing's leadership, facing undeliverable inventory and a closed market, saw no choice but to suspend production. The company's warehouses quickly filled with unsold jets and unused components, while tense meetings at headquarters focused on damage control and contingency planning. The financial impact was immediate and severe, with billions in orders frozen and the company's stock price plummeting. The ripple effects are immediate: thousands of U.S. jobs at risk, suppliers in turmoil, and Boeing's future in jeopardy. Workers faced sudden layoffs, and small businesses that depended on Boeing contracts found themselves on the brink of collapse. The entire American aerospace supply chain, from raw materials to high-tech components, felt the shock. This isn't just a business setback. It's a symbol of a deepening economic conflict between two superpowers. The Boeing crisis became a flashpoint in the ongoing trade war, with both governments digging in and global markets reacting with alarm. Investors watched nervously as the standoff threatened to spill over into other industries. For decades, Boeing embodied U.S.-China trade cooperation. The company's jets were a familiar sight in Chinese skies, and its partnerships with Chinese airlines had helped fuel the country's economic rise. Now, that partnership is unraveling at breakneck speed, replaced by suspicion and uncertainty. The production halt sends a stark warning to Washington. Trade wars have real, painful consequences for American industry. Lawmakers and business leaders alike were forced to confront the reality that political decisions can have immediate, far-reaching impacts on jobs, innovation, and the nation's global standing. As Boeing's factories fall silent, the world braces for the next move in this high-stakes standoff. Airlines, suppliers, and governments everywhere are watching closely, knowing that the outcome could reshape the future of global aviation and trade. The fate of a global manufacturing giant now hangs in the balance. The coming weeks will determine not just Boeing's future but the direction of U.S.-China relations, and perhaps the very nature of international commerce itself. The trade war's shockwaves are spreading far beyond the U.S. and China. What started as a bilateral dispute over tariffs and trade imbalances has now evolved into a global crisis, with ripple effects touching nearly every continent. The world's interconnected supply chains are being tested like never before, and the consequences are becoming impossible to ignore. India, a major player in the global economy and a key U.S. partner, has taken a dramatic step by freezing a $3.6 billion Boeing defense deal. The official reason? Escalating U.S. tariffs and the resulting surge in costs, which have made the deal untenable for India's defense budget. This move is not just about economics, it's a clear message to Washington that India will not be pressured into unfavorable agreements. By putting the brakes on such a significant contract, India is signaling its willingness to defend its national interests, even if it means risking its strategic partnership with the United States. This bold stance is being closely watched by other nations who see India's actions as a potential blueprint for their own responses. And India is not alone. Other nations, Canada, Mexico, Switzerland, are also pushing back, announcing retaliatory measures and forming a loose coalition to challenge U.S. trade policies. These countries are coordinating their responses, sharing intelligence, and leveraging their collective economic power to resist what they see as unfair treatment. For Boeing, the crisis has now gone global. The company is reeling from lost sales in China, canceled contracts in India, and mounting pressure from governments and investors alike. Its reputation as a reliable supplier is being questioned, and its future in key international markets is suddenly uncertain. The freeze of the Indian deal is a major blow, compounding Boeing's commercial troubles with significant military losses. The company is facing production slowdowns, layoffs, and a growing sense of unease among its workforce. Each canceled contract adds to the mounting financial strain. Around the world, governments are rethinking their procurement strategies and alliances. Trade tensions are no longer just about economics. They're bleeding into security, diplomacy, and even military cooperation. Countries are weighing their options, seeking new partners, and reconsidering long-standing agreements. The global market is fragmenting, and American exporters are facing a hostile new reality. Goods are being delayed or rejected at foreign ports, contracts are being renegotiated or scrapped, and U.S. businesses are struggling to adapt to rapidly changing rules. What began as a U.S.-China spat has now escalated into a multilateral standoff, with real and immediate economic consequences. The world's largest economies are now entangled in a web of disputes, and the risk of a global downturn is growing. Countries are making it clear they won't accept policies that harm their economies or undermine their sovereignty. Protests are erupting, leaders are issuing strong statements, and businesses are demanding action to protect their interests. As more nations join the fray, the pressure on the U.S. continues to mount. The damage to global commerce may be lasting, with trust eroding and alliances shifting in unpredictable ways. The world is watching to see how Washington will respond. The landscape of international trade is being reshaped before our eyes. The choices made today will determine the future of global commerce, and the stakes have never been higher. The ongoing trade war has pushed the global aviation supply chain to the very edge of a precipice, creating a situation that is both unprecedented and deeply concerning for the industry. China's recent ban on US-made parts has severed a crucial link in the intricate web of aerospace manufacturing. This move threatens not just Boeing, a giant in the industry, but also a vast network of suppliers and competitors worldwide who are now scrambling to adapt. Production delays are becoming the norm, with shortages and soaring costs casting a long shadow over the entire industry. The ripple effects are being felt far and wide, affecting timelines and budgets. Even industry giants like Airbus and China's own Comac are not immune to these disruptions. Both companies rely heavily on US and global suppliers, making them vulnerable to the ongoing crisis. Ironically, China's ban could backfire, potentially crippling its own ambitions to build a self-sufficient aerospace sector. The very foundations of its aerospace dreams are now at risk. Safety concerns are mounting at an alarming rate. Airlines are scrambling to secure certified parts, raising the risk of counterfeit components entering the market, which could have dire consequences. Regulators are on high alert, fearing that these supply chain failures could compromise passenger safety. The stakes have never been higher, and vigilance is paramount. This crisis starkly exposes the fragility of a just-in-time, globalized system that has been optimized for efficiency, not resilience. The vulnerabilities are now laid bare for all to see. Companies and governments are now rethinking their strategies, prioritizing security and diversification over mere cost-cutting. The need for a more robust and adaptable system is clear. The future of aircraft manufacturing is poised to be more fragmented, expensive, and uncertain than ever before. The industry stands at a crossroads, facing challenges that will shape its trajectory for years to come. Boeing's vulnerability is now on full display. With tariffs soaring and Asian markets closing, Boeing faces canceled orders and a deepening financial crisis. The loss of China and India could push the company to the brink, especially as airlines worldwide reconsider their commitments. The risk, a permanent split in the global aviation market, with Boeing confined to the US and allies, while Airbus and Comac dominate elsewhere. Boeing's heavy reliance on the 737 MAX and a single market has become a glaring weakness. Unlike Airbus, which offers a broader range, Boeing's fate is tied to one model and one region, now ruthlessly exploited by trade politics. The company's future as a global leader is in serious doubt. As Boeing falters, Airbus is poised to seize the moment. Airlines worldwide are turning to Airbus to avoid tariffs and uncertainty, potentially shifting the balance of power in aviation. China's COMAC too stands to benefit, with government backing and a protected home market, but both face challenges. Airbus's supply chain is also exposed, and ramping up production won't be easy. COMAC's C919 still relies on Western technology, making it vulnerable to further sanctions. The race for aerospace dominance is on, but the path is fraught with obstacles. Airbus must avoid becoming a target itself, while COMAC must break free from Western dependencies. The throne is up for grabs, but no successor is guaranteed. The US-China trade war is inflicting damage far beyond aerospace. Trade between the two giants is shrinking, disrupting global commerce and rattling markets. US consumers face higher prices and empty shelves, while manufacturers struggle with rising costs. China threatens to restrict rare earth exports, and both sides are piling on new fees and delays. Economists warn the tariffs are causing deep, lasting harm. Global trade volumes are falling for the first time in a decade. The world is entering a period of slower growth and greater instability with no clear winner in sight. The tariff war is redrawing the map of global trade. Nations are diversifying partners, building new alliances, and prioritizing strategic autonomy over efficiency. India's freeze on Boeing deals and China's push for self-reliance are just the beginning. Trust between countries and corporations is eroding, making long-term investments riskier. Supply chains are shifting toward friendshoring, trading with allies instead of rivals. The world is moving from a single global market to competing economic blocs. Boeing's future is now tied to unpredictable geopolitics. With China and other markets closed, the company must focus on shoring up finances and supporting its domestic supply chain. Calls for dialogue grow louder, but both the US and China seem dug in for a long fight. Boeing's only option: adapt, restructure, and strengthen ties in markets that remain open. The company's fate depends on political breakthroughs, or it risks permanent decline. The next months will determine whether Boeing can weather the storm or be diminished for good. Boeing's production halt marks a turning point for global aviation. The crisis has exposed the dangers of over-reliance on single markets and fragile supply chains. The trade war has gone global, with nations using contracts as leverage and supply chains unraveling. The winners, Airbus and COMAC, face their own risks, while the entire industry confronts a fragmented future. Economic nationalism is rising, and trust is eroding. The world stands at a fork: continued conflict and division, or a chance for renewed cooperation. The answer will shape the future of aviation and global trade for years to come.